The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 132. You get the Nasdaq off 34. S&Ps are off 12. Gold contract down to $11, trading at $12.16. They slammed that baby this morning, as well as silver. Silver's down 29 cents, $15.28. Copper down 7 pennies, big number, $2.68 a pound. Light sweet crude, I have it 75 cents, but I think that's maybe. 1 second. Let me put this up here. That may be.
I think you're looking at the wrong contract.
We just changed that contract. Yeah, let me pull this up. Yeah, light sweet crude up 79 cents, $69.55. Notes and bonds. We get the 10-year note right now, trading up 3 ticks, 120.05. 30-year bond up 12, 145.03. King dollar up 384 ticks, 95.195. Now. You have huge divergence, and the divergence is this, okay? You have King Dollar. It was up 650 ticks, going over the highs of October 2017, and it's going to be amazing if it gives it up again, because it's been up there. This is the 4th separate time that it's been up there in 6 weeks trying to take it out, and guess what? The bond market's saying you're not going to take it out. And you talk about divergence, it's as wild as you get. The Fed's saying it's going up on rates, but guess what? Everyone keeps buying notes and bonds. Yeah, so we'll see where this shakes out today. But this is a big test today. So far, it's failed. So we'll see how this shakes out. Euro's at 116.10. The yen is trading out here at 112.89. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim. And don't forget, folks, we got a new show, Fast Markets, and if you listened to it yesterday, it is fast. Him and Tom, you talk about, I'm going to take this trade. I'm going to take this trade.
I was listening to it.
It's awesome, man. It's totally where it's at. And he's got Fast Markets out here today. We're in earnings season. You get a lot of things moving. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How about Tom? Hey, Tom O'Brien, how about the heavyweight battle going on right now in the bond pit?
It's unbelievable. I mean, let me tell you something, man. You know, since the low out there, and particularly because I think my perception is that everyone has been saying bonds are going down for the last 10 years, okay? And they just refuse to break. And this morning I'm looking, and I'm seeing the dollar up 600 ticks. I'm saying, hey, this is the first time now that the dollar really got above that October and November 2017 high.
Significant.
Yeah. And guess what? It just reversed. It's like, oh, my God. So it's like, you know, we'll see. There's a headwind out here somewhere. I mean, if you believe the bond market. That's kind of that's how I'm looking at it anyway. It's like, you know, fundamentally, you know, and common sense-wise, when I look at it, well, that shouldn't be happening. I mean, rates should, you know, Powell said the other day, hey, September 29th, we're going up again. But guess what? You know, the big money is saying, well, you can go up again, man, but I feel safer in bonds right now, and I'm going to drive them higher. So,
yeah, I mean, what the markets are saying basically, Tom, is, all right, Jerome Powell, you control the 2-year notes and maybe a little bit of the 5-year notes, but the 10 and the 30 are left to the open market.
They are.
And the open market isn't just ready to give that. You know, I really think it has more to do with the European markets, Tom. Don't you? And how low their rates and yields are. I mean, I think there's just so much demand for the price of our bonds based on where every other bond in the world is, frankly.
No, I agree. It totally makes sense. And what Kevin's talking about, folks, when you look at it, it absolutely makes no sense and hasn't for a long period of time. So picture something. If you give money to the United States of America for 10 years, they will pay you 2.8%. If you give money to France, they're going to pay you 0.6%. Oh, really? If you give it to Germany, it's 0.3%. Now, when you really want to get at the bizarre end, Spain is broke, beautiful country, but they only give you 1.2%, okay? That is whacked out. You know, well, hey, if we want to go to Greece, they'll give you 3.8, but we know that they're broke, right?
Sure.
Great country to visit. Go visit them all, folks, okay? But
And remember, Tom, Mario Draghi basically said, about a couple of weeks ago, we're not doing anything on rates until at the earliest next June. So he basically said a year out.
Yes.
That's what's really kind of put a halt to this overall bond market. So it's going to be a little trickier trade than everyone thought. It's not just rates aren't going right to 3.25, and the bond markets just aren't obviously going down. Just look at the chart on the bond. It's not like they're rallying them very far, but it's really turned into a really choppy two-way trade here without any real. But they tried to sell them this morning.
yeah,
right?
oh, big time.
And all of a sudden, just a turnaround.
You know what, folks, when Kevin first started, can you imagine what he was saying specifically? He's like, imagine what's happening in the bond pit. And what has happened, folks, is that when the CBOE, or CME, they built a beautiful bond pit. It was a monster. And that was right when electronic trading took over. I would love that if we ever could see, Kevin, you've been in the pits. I've never been in the pits. I've seen them 2 or 3 times as a visitor, right? I couldn't imagine the fight that would be in there right now. Do you know what I mean?
Yes. I mean, these are the days when you see turnarounds like that and big movement in these bonds that, those are days you eat a little breakfast before you go to the pit. You eat a little lunch when you leave the pit at the end of the day, and nothing in between.
Yeah, and you hope you don't throw it up, right?
Exactly. Those are the days, Tom.
Totally.
We got a lot going on today. We're going to talk about crude oil.
Yeah.
We're going to talk about Microsoft's earnings. We're going to talk about the bond market.
Yes.
On fast market, we're going to show you how you can trade this bond market in paper money based on what you're thinking and where the overall market is. We're going to have several opinions. Tom White and I have polar opposite opinions about trading the bonds right now. So we're going to, and Sean Cruz is going to be on too. He's our local economist straight out of the Booth School of Business at University of Chicago. So we're going to throw it out there. It's like I said before, Tom, it's like traders sitting around the breakfast table discussing what they're going to do before they go trade. That's what we try to do here. You're going to hear a lot of different ideas, but we're going to put on paper money trades in all these names, and we're going to track them and work through them. So lots going on today.
And folks, okay, this is a new show, started yesterday.
Yep.
Please check it out at TFNN. It's an amazing show. And as Kevin just said, you're going to feel you're right there. I mean, when I tuned in yesterday, It was like, oh, my God, okay, because they're all making their opinions. They're putting it on paper. They're saying, okay, and they're putting the strategy out as to why. So, in the market, folks, bulls and bears are where it's at, and that's where markets get, you basically are coming together, looking at the strategies, and you'll figure out what's right for you, because it's your money. That's the bottom line, and that's what they're teaching you, that, listen, the money management's the most important. Decay inside the option market is huge.
Learn by example. That's what I like.
Totally, man. Totally.
What do you do when you're right, Tom? What do you do when you're wrong?
You got to love it.
Learn it all.
Well, listen, man, it's always a pleasure. Look forward to the program. 45 minutes, Kevin. You have a great one and a safe one.
Great to see. Great to talk to Tom and Tommy. Have a great day.
You too, man.
Kevin. Take care.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 89 right now. Nasdaq's off 27. S&Ps are off 8.5.
Dollar
right
index.
back.
It's rising, man. It's pulling back. Sorry.
Yeah.
Isn't that number? We're at even.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow down 90, Nasdaq is off 29, S&Ps are off 9.5. Let's go to Jose and Brandon. Jose, what's going on, brother?
Hey, Tom, it looks like the institutions holding Newmont Mining aren't going to let the gold sellers take advantage of them, huh?
Well, you know, it's pretty amazing that gold has got slammed like this, and there's no doubt. Newmont's holding price, man. It came into the lows of the February 9th, it did it with light of oil and rejected it. And Newmont, folks, if you are looking at the GDX, is the only thing that actually saved the GDX yesterday. And more than likely, it's going to save it again today. It's the largest weighting structure, and bottom line is that, you know.
It seems gold is too subject to headlines, too weak on headlines. I don't understand your rationale. A year ago, we were facing 4 interest rate hikes. They advertised the hell out of it. I mean, do you think that you following the dollar and the yen is not enough road signs to know where gold's going? You got to admit, you've been befuddled by gold the whole year, haven't you?
What's the definition of befuddled?
Well, every day you come on saying gold wants higher price. It's going the other direction. So I can only,
well, you know, okay, then I guess you could say that, yeah, you know, yeah.
But the thing is, are you ignoring interest rates? I don't even know why gold was at 1346 at the middle of the year when they knew 3 or 4 interest rate hikes were coming.
Where my head is with gold and has been, and it is on a continual basis, right, is that the market, meaning the market makers, you know, that is J.P. Morgans of the world, the Goldmans of the world. You can slam gold really easy inside the aspect of the futures market. What you can't do, if you go try to buy a coin right now, the premium's $100. So what ends up happening is that, yeah, we just come down $100, but when we're at $13.24, the premiums were $35. Now they're $100. So when I look at that, I'm saying to me that the dollar is not going to hold. You know, and the equities basically is still held up. You know,
yeah, I can't take that away from you. The equities have, the GDX is held up, but it seems like Wall Street does the same with all asset classes. They take it to the excess on the upside, downside, and so 1100 is still possible.
I hope not. But we know that anything's possible. You know, listen. You know, it's a wild. So, picture. Today, I was just saying to Tommy, this dollar index, man. I mean, this overtook, you know, that 2017 high pretty good, and now it just gave it up. So it's like, okay, man, you fail again up here. That just says to me that this is even better. You know, I've been in this market long enough that I know that you need everyone to hate gold for it to go, and then there's plenty of folks, you know, that turn around and think gold is never gone, but the equities, you know, are still up 30–40%. So.
Yeah, no, you've seen it all. 18 years behind the desk there. No question about it. All right, we're hanging in there with you, Tom.
Okay, brother. Have a great one, man. Have a safe one.
Okay.
Natural gas.
Okay.
Thursday. Natural gas.
So what time is it right now? Let's jump over.
It's 10:21.
Okay, perfect. So 10:21, we're jumping over the Nadex platform. Here's our natural gas contract. I asked what time it is because we get those numbers at 10:30 exactly. Thursdays for natural gas. Wednesday, yesterday, we got oil. Oil with some big-time volatility this morning.
Yes.
So natural gas, we're looking at the August contract, currently trading 271.65, and we get those numbers in about 8 minutes. So we're going to look at possibly setting up a volatility trade with exposure to the upside and the downside. I jumped to the 11 a.m. expirations first.
Okay.
And what we want to see is what kind of price spreads are we going to have in these spreads, right? So we're looking for upward exposure and downward exposure, buying the bullish one, selling the bearish one. That way you have exposure in both directions. So the 11 a.m.s, and I'm just going to jump around quick, they line up with 270. I'm guessing that it's probably going to be 270 is going to be our point, for noon expirations, and as well as probably even, the dailies.
It's not bad, a penny then, right?
No, it's not.
Yeah.
You know, you're going to be paying for intrinsic value to the upside is what's going to happen. So we'll go through each one. 11 a.m., so you have basically 30 minutes after the news. Let's pull up. Here's your bullish trade. Now your bullish spread, that's the one that's going to have intrinsic value because you have value in anything over 270.
Yeah.
You're trading at 271.65, so about 16 ticks of intrinsic value. And that's where a lot of it's just intrinsic value, and you're only paying about $4 in premium there. And then your bearish one basically is going to be completely out of the money spread, where that one's going to cost you about $7. So you're looking at $27, which represents
2.7 pennies.
Exactly, away from that 270. And the key being that you need 2.7 pennies in either direction. You already have 1.7 pennies to the upside.
Right.
So you really only need a penny of movement to the upside from where we're currently sitting to break even, and that's because you only got to make up what you're kind of paying for here and some premium, versus if you want to make money to the downside, you got to go 2.7 pennies below 270, just so you're aware of like that market bias, right? So you have a little bit of a head start to the upside.
Those are the 11.
Those are the 11s, and on each of these trades, you're going to have that little bit of a bullish bias where you're going to be paying for that intrinsic value. We'll jump to the noons, so same exact price spreads. Here's your bullish spread. Now, it's interesting here. We'll just put it side by side. Here's your 11 a.m. expiration.
This is pretty cool.
Here's your noon, right?
Yeah.
We're talking about 1/10 of a penny.
I know.
Is the difference. And in fairness, natural gas, not as volatile as crude recently.
Right.
But if you are looking for volatility, so if you're making a volatility trade, you're automatically saying, I think the market isn't pricing in enough for the volatility. I think it's going to be more volatile than maybe the market is pricing. And that's not a bad price if that's actually how you felt, to push it till noon until 11. So with that, so you'd be buying again the bullish spread. Now there's about $18, $19 as we speak. Natural gas is rising in intrinsic value. So the bullish going to cost you about 24 to 1 per contract, and bearish going to be a very similar. Now this is what's really interesting, right? So let's take a moment here. The bearish spread, just to look at things, because it's out of the money, it's the exact same price to sell it. Let's just say you were bearish.
Right.
Just this side of the trade.
Right.
What a great idea. You know, this is where you really want to get used to it. Download the demo account if you're going to be trading on this, because that would be a mistake to ever be selling this for just $7 of risk when you can do the same exact trade until noon. And let's just see and jump ahead.
That's
so that trade, the noon's going to cost us about $31 to $30 about. versus 24 for the 11 a.m.s.
Okay.
And then let's jump to these, because here's what's going to be interesting. So the 230s, they're going to give you 50 cents of movement.
Okay.
I don't know what would have to happen in the market to see 50 cents. Very unrealistic, but still
that's
it doesn't.
$5,000 a contract, folks.
In the futures. In the futures, not on Nadex.
Right.
If you're, so here's your bullish spread. Be paying about 26, okay, and that's basically just paying for that extra 2.5 hours till 2:30, because you're still getting in with the floor at 270, so very similar to the noons. The only difference being is you have 2.5 extra hours, but look at where the market. So now you're paying about an extra 0.2 of a penny for that extra time, and then on the bearish side, going from 270 down to 220. And this is where, so it looks weird that it's actually cheaper.
Wow.
But what just happened is natural gas, in our comparisons, went from 271.6 to 272.1.
Okay.
So this is really interesting, where you really want to be all over it. So check out the divergence in this market. You want to sell and be a bear. You can be until 11 a.m. for $7 right now, or you could have all the way until 220. For $6. So to finish our comparison,
that's mispricing.
Yeah, it is a little bit of mispricing. So to finish the comparison, it looks like the 230s. Is that right?
33.
33. Yeah. So it's like 24, 30, and 33.
Yeah.
Good. We'll be right back with those natural gas EIA numbers.
Stay right there, folks. Come right back. Dow down to 111. Nasdaq off 29. S&P's off 11.5. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got a little move topside here in the gas
What's your
market.
definition of little move? Because,
Totally.
man, oh, man. So, yeah, we're looking at the chart. Obviously, we're trading at about 271.6, right? Was right where we're at. We're now at 275.12.
Look at that number.
So, any of these points, we'll jump to the numbers. So, it looks like we got to stockpiles rising 46 billion cubic feet last week. You had natural gas inventories rising to 2.25 trillion cubic feet, the estimate being 56. So slightly under that. That's where you're seeing that price jump in terms of not coming quite in with where we got.
Look at that number.
Yeah. So just to recap, remember, I mean, it's always nice where, as we're going over, this trade had a little bit of a bullish bias. You had a head start to the bullish side.
1.5 pennies.
And when you get the jump to there, you know, any of these trades, I believe the first one was like around $24, so 2.4 pennies. We're up to 30. Even the 230 trades, those are going to cost us about $33, right?
Yep.
Meaning that you need about 3.3 pennies just to break even for that trade. Man, and quite a rocket ship as it goes. Just
it is.
Continuing to climb, approaching 276. I mean, you're almost up 6 pennies from where we were right at 935. Quite a little lead up. Maybe who knew what was going to happen, man? See that little rise for the final half hour into those numbers?
Big number, man.
Big number, for sure. So we'll check back, but quite an acceleration.
Let's just pull a couple of them up and see what the bullish one's trading at right now.
Sure, yeah. So to jump, we'll jump to the noons just to give or take. There's your bullish spread where all your value is going to be in, and it's pretty much going to be just oscillating right around bid offer, right around where natural gas is basically trading.
No, I meant money-wise, if you took one side off.
Sure,
of the trade.
Yeah. So you're looking at about 52, right?
That's nice.
Oh, definitely. And that was the noon, which I believe was going to cost us around like $27, 2.7 pennies. So you're talking about almost doubling your money. And if you have the noon, you could close out the bullish spread. What would remain active is still your bearish spread. Now, this is offering no value as it should because you're almost 6 pennies out of the money.
Totally.
But guess what? Turnarounds do occur as we see it on a regular basis after these numbers. Doesn't mean it's going to happen today, but we would see what happens.
What's intriguing is that they were only 10 BCF short, and the market is saying, well, guess what? That build, you know, before, you know, I'm not sure when it's, whether it's 6 weeks that they start using natural gas again, basically. You know what I mean? When the build season is. But that's pretty impressive, man.
No, quite a market reaction. And there's your full breakdown in terms of week by week where the build is. They break it down by region, but yeah, surprising market. And as we jump back, still just kind of hanging right above that 275 price point. And we'll check back in one more time throughout the auto.
So let's go over and take a look. We have
a caller, I think.
Oh, okay, cool.
Let me jump back.
We got our man Jim.
We do.
Jim, what's going on, brother?
Hey, how are you guys this morning?
I'm doing great, man. Yourself?
I'm fantastic. Just another good day here in Palm Harbor.
That's a beautiful thing, man.
Totally.
That's a beautiful thing.
I wanted to talk to you guys about AMAT, Applied Materials. On the daily chart yesterday, it looked like an island bottom, and I bought a little position in it. I plan on holding it quite a while.
Okay.
But I was just wondering what y'all think about it.
So let's take a look at it. So what you have here, AMAT first off had come into the lows of February 9th. That's the infamous day that has to be tested. It tested it. So February 9th, we had 22 million shares traded, 45.13. We went to 44.57 with 13 million versus 22. That's what you want to see. And then what you did get yesterday, you got a sign of strength. That's a small sign of strength, but you got it, which is nice. You actually took out this little leg here, which is saying it can go to 49.79, which is cool. So what you want to see today, Jim, right, is that you can see the day of July 11th, right? The high of that is 46.21. You have volume of 13.3 million. What you'd like to see is less than that at the end of the day. You know, if you get that, that basically would start basing out. That's what it looks like, and you can get into higher price. Let me just pull this back a little bit more, see what else we got.
On that daily chart, does that meet your definition of an island bottom? Like a 3 or 6 month chart?
Thank you. It does not, no. What happens is that what happens with an island bottom, oh, no, you're right. No, absolutely. It's a much larger one. Okay, that's pretty cool. Yeah, it is. So what happens is this is pretty cool. Yeah, it's definitely, what you had done is this. You had gapped down, folks, on the 22nd of June. You actually made the low, came into the swing point from February 6th. And then you gap higher. Yeah, that's a beauty, man. That's I can tell you, the reason I said no first, that's very unusual when you get such a large island bottom. That most of the time it's 2 or 3 days. This is
that's what I thought, and I thought, well, to me it's still like an island bottom, but I wasn't sure when it was such a large one. That's why I wanted to ask.
And if you go, so Steve Nissen, bottom line, has, I think, one of the best candlestick charting books. If you go according to what's in that book, and I've seen enough of these larger ones, the larger that the island bottom is, the more powerful it's supposed to be. That's the bottom line. And I suspect you're going to get confirmation out here today if that's what that's what we have happening. And to me, the confirmation would be is that you can dig into this price out here of the the 46.21, and it doesn't look like it wants to get that low, but that basically is saying that you get some action, man. And depending on how many points you're looking for, when I look at this, it looks to me that this can get up to like the 48.53 pretty easy. That's the downdraft that was created out here. That's when you'll get some flack. First time you get some flack. Let's put it that way.
Okay.
If we look at this now, watch this. This is pretty bullish for you. When you take a look at how we broke this trend line, this would be our man, Mr. Bud Rolfs. This is a perfect setup. It's like you break the trend with volume, right? The net trend would be up at 56. You come back to the line again, and bottom line is that you get some action. I mean, there's some clarity in that, and they don't come out with numbers until August, that's what you want. That's the bottom line. You don't want them coming out with numbers the next few days.
Right. That's outstanding. I really love you guys. You really help out us little guys, and I appreciate it.
Oh, well, listen, man, we appreciate you growling and prowling. And every single day I'm looking at NVIDIA, man, and I know I said no, I didn't like it down here at 233, and it's a 250. So every day I bring this up, Jim. I say, oh my God, But yeah,
I know it's a hard one to pin down. So.
Well, we know that when it goes, it goes, and when it's either way, when it takes off, it takes off like a rocket ship, and when it gives it up, what's intriguing with the NVIDIA in general, the chips take the Nasdaq up and down. NVIDIA takes the chips up and down, so.
Right.
Yeah.
And anything to do with semiconductors and the equipment that make them, like, let's see, I can't think of all of them right now, but they're very volatile a lot of times because DRAM and stuff's sort of like a commodity.
It is. It is. And it's been, it's amazing. So picture this, folks. When you look at Micron, now this is quite a story, because I remember the guy's name was Simpler or something. He was the largest potato farmer in the world, right? That started this company, that owned Micron. And when you look at Micron, it's amazing. 2008, it's $1.59. You're 56. And if you bring this back, watch. If I bring this back quickly, just to like 90, you got to see. This has always been that shows. You had a $97 stock. You had a $1 stock. You're back to 50. This is the commodity business, man. Cooking, brother.
Okay.
Have a great one.
Have a good day.
Thanks, man. Thanks. Appreciate it. Stay right there, folks. Tommy and I are coming right back. We'll look at those natural gas numbers again.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now down 107. You get the Nasdaq off 37. S&Ps are off 12. Let's go over to our man, Mr. Jack Gleason at MajorLeagueTrading.com, as we do each and every Thursday at 40 past the hour. Jack Gleason, what's happening, brother?
Hey, guys. How's it going?
Morning, Jack. Great, man.
Reviewing some charts. Oil continues to dive lower, although it's up today. But man, it's really come off since I guess we talked about it. What was it, last Thursday?
It's been quite a week, man. Right?
Yes.
Last Wednesday we were at $74. We went down to 66, and then quite a bid this morning, but still quite below where we were last week. We got your chart up here.
So we're looking at your chart right now. Talk to us.
Okay, cool. So oil, I'm going to pull it up here as well. I'm looking at kind of if-then statement, whatever trades first.
Yes.
So on the lower end side, the support level I'd look for is a 65.80. That would be a check back to the bottom of the range. We had futures roll over in the oil contract a couple weeks ago. So a lot of times when we roll over, we'll retest some of those major levels. So that 68.50 to the downside, I'm interested on a potential long position. And then if we can rally first, I'm looking to actually short into what would be the full 50% retracement from that most recent high. That is that 70.78 level.
Yep.
And you can see I've got that marked off with that red box. So whatever trades first, it could be higher first or lower first, regardless. Both of those levels are of interest to me. And you can see, I always like to say, if I'm looking at a trade, look left of the chart. Is there a consolidation phase there? And you can see both at that halfway back short at that 70.78 level, there was the consolidation before the most recent breakdown. So I would expect naturally there to just be resistance there on top of being a halfway back short. And then on the other side, on the long at the 65.80 level, you look left of that chart, you can see that's a consolidation before the breakout higher. So that's where I'd be anticipating. It's also an extension. I don't have the whole high to high up, but it's from I think it's from last August high to high. It's continuously held those levels. And so those are the two levels I have for oil. So mark those up, set your alerts, and then we can move on to the next one if you guys want, or we can continue to talk about oil.
No, absolutely. And I love what Jack's done here, folks, which is really cool. You take the fib numbers, he's taking the consolidation, he has some real clarity. Basically that's where you're setting it up. And when you have your back against the wall, well, guess what? Bottom line is that You're selling at one side, you get to stop on the other side. You're buying at one side, you put stop on the other side.
Totally.
It is. There's some real clarity
nice and
there,
clean.
man.
Yeah.
Keep it math-based. It's I
like it, totally.
There's no doubt, man. There's no doubt. So the next one.
What do you want to jump to? I know we got a couple other charts. Russell, we got the.
We'll go with the Russell.
Perfect.
It's the strongest. First, I'll start off. Russell's been the stronger market here today, although last week it was the underperformer. So the fact that it's kind of, at least today, leading us out of the consolidation is something I want to pay attention to. Now, the Russell got a reversal out of, what was that, on Monday when we kind of peeped down into the close. What that level was just, once again, the full halfway back long from that most recent swing low that you see on that chart there. We just traded that level, and that was enough. You know, buyers had gotten stopped out as we took out the previous week's lows into Monday, sold it down into that halfway back. Looks like they got trapped because there was an instant reversal. We haven't retested that level. And then the prior day's low to high, so yesterday's low to the overnight high, targets up into 1700.9, and that's on a more recent target. So if that starts trading today, we're trading 1698 now, so it's not very far away. That is where I would expect some profit taking. But on larger time frame targets, if we continue to hold these support levels, that's going to give me a measure up to 1734 where we're currently trading. And that's where I would target over the higher time frame. So that's what I'm looking at in Russell. I do like the fact that it's leading here today. I think some of these other markets are going to be more in a consolidation phase. Us holding the prior day's low to high and sticking that 50% is always a good sign that that's going to be one of the stronger markets, because the S&P didn't do that, the NASDAQ didn't do it, the Dow didn't do it. All of those markets traded below Wednesday's low when you got the Russell holding the 50% retracement. So look for the Russell to lead us out of this consolidation at this point in time, and that's what I got for that market.
Nice. And Jack, it's amazing that the Russell always can get a little tricky because that moves so quick into the close, because they put so much into the close, whether they're buying or selling. When you look at the volume characteristic into the close, it's huge, man. I mean, sometimes it does 20% of what it did all day into the close, and it's like they jam it either way. So it's intriguing.
Yeah, all of the ETF rebalancing, and whatever they do.
Exactly.
But that's what makes those levels react, is when you get, because those traders that are typically you had the breakdown stops getting hit on Monday, but those the institutions and stuff, not really looking at charts. You're just going, okay, we got to sell this and buy this.
Exactly.
Just of whatever. And then that creates an opportunity for traders. And when you see that instant reaction, that's when you really want to start paying attention to, hey, is there a bigger level in play here? And, my opinion, there is.
Totally. And the next chart we have is the
pound yen, huh?
Pound yen.
Okay.
What do they call it? The dragon, which is, so I trade a little bit of Forex, specifically on Nadex. So anyway, large halfway back, we came in here today. There was really a nice rally over the last few weeks. We got a 3.5 day pullback into that 50% retracement. I almost love to see that, where you have like a nice steady rally for a couple of weeks and then a sharper pullback into that halfway back long. So that's going to target much, much higher. Let me actually give you the full target, but we are trading 146.79. If you're looking at Nadex, you got the 146.80 strikes, but all the way, that upside target will be 150.59, and the pound yen moves more than any other of the currencies.
That's a big baby.
That is.
That's a big baby.
We
I
like
that.
big moves.
I
totally.
like that. Yeah, totally.
Yeah, so pay attention to that one.
That's absolutely huge. And listen, folks, you can come over to our website at TFNN. You go right under Nadex News. Jack is always over there having some great articles, great webinars. That pound, last week we had a lot of action with Brexit, and I guess that's going to continue. And it's really like, okay, what's really moving that?
There's so much up in the air over there. It's like
and it's the constant news cycle that just keeps on giving. You play a technical. I mean, good news is bad news. I think that last week wasn't there a big draw on oil?
There was. 12 million barrels, I think, was last week before.
And it crashed.
Yeah, it jumped up to $74 in the span of 5 minutes, and then it was down $4 over the next 4 hours. Yeah.
Which is just crazy.
Right?
So,
I know. How does that? Yeah.
Yeah. You gotta love it.
They might have read it wrong, you know. Maybe the algo.
Something was in that report, man, that said sell, sell, sell.
Well, we know that the market is deviant. The market's job to take the most amount of money away from the most amount of people in the least amount of time.
I like that. Totally.
And that oil market last week definitely did.
You got a 12 million barrel draw, and then oil drops $4.
Yeah.
Man. What would have happened if you got 12 million surplus, right?
Oh my God!
Build. It's like
seriously,
it's crazy.
Seriously. Yeah. And we just went through the natural gas numbers. That got a little pop out here this morning. So
I haven't checked that yet.
Yeah, it's going to be intriguing watching how that thing shakes
and
out.
nothing too surprising on the numbers, right? As in 10 billion cubic feet off, but yeah, it was up like 5 pennies in the last hour or so.
Yeah. Well, listen, folks, you can check Jack out every trading day right at MajorLeagueTrading.com. You can check him out here every Thursday, 40 past the hour. Jack, thanks so much for the great education. You have a great one, safe one. We look forward to speaking to you next week.
You too, guys. Thanks for having me on.
Thanks,
awesome.
Man.
Thanks, Jack.
Okay, have a great one. Stay right there, folks. Tommy and I are going to be coming right back. Our phone number is 877-927-6648. We have the Dow down 108. NASDAQ is off 34. S&Ps are off 11. We're coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow's up 94, Nasdaq's up 29.
They're
down
all down.
94, Nasdaq's down 29. S&Ps are off 10 natural gas.
Yeah, we'll check back in one more time in the hour. Quite an acceleration as we speak, above 277 now. It's about 10:55. We're 25 minutes after those numbers.
Big number, big
Quite
move.
an acceleration, no matter where you leveraged your trade there.
That was
quite an
nice
acceleration.
trade.
So yeah.
Let's go to our man Tom in Plymouth. Hey Tom, what's going on, brother?
Hey, good morning, guys. How are you?
I'm doing great, man. Yourself?
Pretty darn good.
What's happening, Tom?
Hey, what are we going to look at?
I'd like to look at the GBTC.
GBTC. So this is the Bitcoin trust. The low out here, you know, basically is $3. The high is 38. It still trades at a 50% premium, but it's tradable. That's for sure.
So Tom,
well, I'm in it at 931, and
That's nice.
Got a little bit of profit here. I'm wondering if I should take it or just kind of let it ride here.
Well, I wouldn't. I'd let it ride at least till tomorrow. I mean, yesterday that high volume at 12.16 is out there. Do you know what I mean? And we, you know.
Yep.
So Tom, can I ask you why you would buy GBTC with that premium in there, net asset value premium of like 50% versus even, you know, and I know Nadex is definitely a sponsor, but versus even Nadex, where you can roll things week to week or month to month, where you're purchasing the straight out Bitcoin, without any of that worry to that net asset value.
Then you wake up in the morning and the premium's down more.
Just another X factor in that trade that you always have to be aware of, I feel like.
Yeah, well, I promised myself back in February when that thing shot way up there, I said, when it gets down below 10, I am buying that thing.
Okay.
So,
okay, brother.
Keep those stops in place,
great,
man.
It's great hearing from you.
Yeah.
And listen, folks, come over to our website at TFNN. Our man, Mr. Steve Rhodes, he's going to be doing a great shop for you today over at
Ninja.
Ninja.
So free to sign up. Check it out.
Right on the front page. Have a great one, folks. Have a safe one.
Thanks
pal. Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.